Yo. Hello, guys. This is David Capable in the building. Today, I want to discuss a very interesting and intriguing topic to you guys, which is going to help you to sharpen your technical analysis of the forex market. So, I want you to sit down, relax, and grab any snacks or any popcorn beside you and listen very attentively to this particular topic. So the topic set before us is called demand and supply. In our conventional economic class, we already understand what the demand is and we already understand what the supply is. Using the layman language, the demand is actually when the buyers are actually in charge of the market, right? And when we talk about supply, when actually the sellers are in charge of this market. Now, the relationship between the buyers and the sellers is connected by one single thing called what? Price. Price is actually the thin line between demand and supply. Now, the reaction between these sellers and buyers will either determine if the price is going to push up or the price is going to come down. Now, when the buyers are in charge of the market, we're seeing that there is more demand in the market. Thereby, the price begin to push up. Then when the sellers are in charge of the market, which is called which we also call the suppliers, we say the market begins to push down. This simple analogy of what the demand and supply looks like is actually applicable in the marketplace called forex. The forex marketplace is actually a relationship of both the supply zone and the demand zone. Now, the supply zone and the demand zone play a vital role to determine if the market price in the forex is going to shoot up or is going to shoot down. All right? Now, this is it. When the market price is at the demand zone, in the forex chart, we are expecting that the market is going to shoot up, that the price is going to shoot up, because the buyers are taking over the market. Same is also applicable, ceteris paribus, if the sellers are actually in control of the market, that is when it's actually at the supply zone. We are expecting that the market is going to shoot down, all right? That the price in the forex market is going to come down. So let's look at it practically, how these things work by taking one after the other what supply zone looks like, demand zone looks like, and how they are applicable and all that in our forex chart today. So guys, let's go straight and see how these are actually applicable. Okay, now what is a supply zone? The candlestick or the bars that mark the origin of a strong downtrend are called the supply zone or distribution zone. Now, you already know that your forex chart is made of either bars or candlestick. Now, when this candlestick get to a peak, at that peak, that particular peak is actually the supply zone. And when the price get to that point and begin to fall from that point, we're going to say that there is actually what is called a distribution is going on, meaning the price is coming down. Now, that peak it gets to is actually the supply zone. So from that supply zone, what are you going to be expecting? You'll be expecting that the sellers are taking over the market. And when the sellers are taking over the market, the price begin to come down. A distribution begin to happen. And that distribution simply means price is coming down. All right? Now, what is a demand zone? The candlestick or bars that mark the origin of a strong downtrend are called what? The demand zone or accumulation zone. Like I earlier said, when the market is at the bottom, the base, okay? It's at the base. Now, it begins to gather momentum. Buyers are beginning to pick interest to push the market upward. Now, that base, that bottom that the market price is, that particular bottom side is actually called the accumulation zone. It's actually from that zone that a push-up is about to happen. So that particular zone is marked as what? Your demand zone. when the market is at its base, the price is at its base, at the bottom. That place is called what? The demand zone. While it is at its peak, that place is called what? The supply zone. I hope you got the difference right now. So now, this is the concept of demand and supply. The demand and supply concept actually rallies around these three major concepts. These are the three concepts how to look at the demand and supply zone in your forex chart. Now, when the demand is greater than supply, the price goes up. Meaning when the buyers are in control of the market, you begin to see your chart price begin to goes up. Then when also the supply, that the sellers are in charge of the market, that means they are high, they are big, they are higher, there are more sellers in the market than the buyers. That means your supply is greater than your demand. The price begin to come down. This is an interaction that happens between the buyers and sellers. So whoever is in charge of the market determines if the market is going to come up or it's going to come down. So if the buyers are in charge, means there are more buyers than sellers, the price begins to shoot up. Where if there are more sellers than the buyers, the price begins to shoot down. But if it is equal, there are equal buyers and sellers, that means equal demand and supply, the market begins to go sideways. Sideways, it means ranging. It just goes between a particular point and come down, means between the point of demand and supply, and it goes down, go up like that, just like the way it happens in the ranging market when we talk about this, the resistance and support zone. You can watch the previous videos and see where I explained all support and resistance zone. The support and resistance zone are actually also termed the demand and supply zone. Do not mistake yourself, okay? The demand is actually also known as what? The support zone. While the supply zone is actually also known as resistance. Do not misunderstand. It's just, they are just used interchangeably. Okay? All right. You understand what the three major concepts for the demand and supply is all about, right? Now, the financial market moves in four phases. We have the accumulation stage, where the market is trying to gather momentum. That is actually our buy zone or our demand zone. Then the markup, when the market is taking a gear to push up, that begins to have a markup. Then it will not get to a peak. That peak it gets to is called the distribution zone, or it is called what? The supply zone. Then from that peak, when it begins to come down, we said it's having what is called what? A markdown. Now let's look at how these phases play out practically using a diagram that explains how how it is shown in the market. Now this is it. You can see the accumulation phase, which is beneath this particular chart, where the momentum is gathering. That accumulation phase that you see in green, mark in green, downward, is actually your demand zone. Now when the market break and starts shooting up, it have what is called markup. As it's going markup, it now forms another accumulation at the top again, which is called the distribution phase, or that phase is actually called what? The supply zone. Please understand this, okay? The accumulation phase, which is actually known as the demand zone, while the distribution phase is actually called the supply zone. Then when it begins to come down from that place, coming down, we say it's marking down. So is that the market is going to be marking up, or it's going to be marking down? It marks up when it's actually at the accumulation phase. Then it marks down when it's actually what? At the distribution phase. Very simple phase explanation. All right, let's proceed. Now, how do you mark a supply and demand zone? A lot of people are beginning to wonder, okay, sir, Mr. Capable, how do I actually understand how to mark the basic supply and demand zone in my chart? Now, there are 4 things that enable you to know how you can actually identify your supply and demand zone. Very simple. 1, the first step you have to take is to identify your current market price. Where is the market price is at the moment? You have to identify that. Then after then, you look left on the chart. You look left on the chart, left on your chart. Then when you look left from the chart, then you look for a big green or big red candle. The big green or red candle, this is very important. Okay, then you find the origin of the big candle. Once you find the origin of the big candle from the left hand side, then you can mark what? Your zone around this origin. When you see a bigger candle from the left hand side, you can now decide if this bigger candle, you now look at the base and actually what? Look at the base and at the peak. Those are where you can actually have a clearer picture of where your supply and demand zone lies. Okay, now this is it. Now if I look from you can see it has actually explained that everything that we just identifying the supply and zone, look at it has actually bring it out here. Just take few seconds and look at how this is well shown. Okay, I don't need to say much here. Look at how it's been marked. All right, is that understood? Just look at it, take your time, look at it, few seconds. Okay, all right, you can see. Then how do you draw supply and demand zone? Most time you draw it from the base, or you pick a single candlestick, a very big single candlestick before you can draw it. And it's just very simple. I don't want to say much. I love being practical. Now this is it practically. This is how to draw your supply. It's very simple, as you can see. You can see if you look up, you can see where the candlestick forms. The peak point there, you draw from that particular point using a rectangular tool. You draw it to identify your supply zone, as is clearly shown here. Okay, the peak, those peak points, areas at the top are your supply zone. Then look at the demand, the bottom, the base, as you can see. Very simple. It shows you. You use the rectangle tool to draw that. Okay, very simple. Then you come down again. This is a very good example again, a very good example of how to draw it. Remember, to draw these things, you can actually use any time frame to draw them, but it's usually advisable to draw these things in bigger time frames. When you look at bigger time frame, it gives you a clearer picture. Bigger time frame like H1, H4, or D1. Okay, you can use to draw your supply. Look at it, very simple. The way you see it there is very, very clear. This is how to draw. Okay, then you could come around. Now you can actually, many people don't really understand how to draw these things, but it's just very simple. If you are drawing this thing, look at those wick. Look at, you can actually draw at the top of the basing candle wick, as you can see from the where the wick ends, the top of it, or below the body and the bottom of the base of a candle body, because candlestick is made of what? Of shadow and body. So at the peak of the candle wick or shadow, you can draw a line there. Then you cannot draw another line which is under the bottom of the base of the candle body. So those particular zone are actually going to be your zone. Either it's going to be your supply zone, because this is actually drawn from the top. This will be your supply zone. Now, in forex, you shouldn't look at a particular price, a particular price as your place of resistance. No, we use zones because it could be in between. I can say between 970 to 973. That particular zone is the zone of supply. I can use that particular example. So it's not like you are using a static price for it. No, there is no static price for a zone. It's within a range. Within the range it falls into is where it is called. That's why we use the word zone. It's called maybe either your supply or demand zone. Now look at how it's drawn. Just look at this diagram. Look at where this line draws. Look at where it draws. Those are the zone where your supply falls into. Now if you are drawing it from the bottom, look at how you can draw it also the same way. You can see where those candlestick, you can see where the candlestick ends. Are you seeing at the top of the basing candle's body? I see. Then from actually the last end of the shadow stick, you can see very clearly. Now this particular region actually falls in between what? 106 and what? 110. This is a zone. So your entry point can be within this particular zone. If you want to enter into the market, you can enter within this place, either from where this candlestick at the top of the base candle's body is, or you can enter actually from the bottom of the basing candlestick from this particular zone. Those are the best place you can enter. Maybe you want to enter a buy. Okay, same is also applicable if you want to enter a sell from this particular zone, from where this from where this wick ends and where this body too ends. You can enter from this particular zone. Okay, so is that clearly understood? Now you want to ask me, how do I now trade support and how do I now trade supply and demand? Okay, now this is how to trade supply and demand. You buy at the demand zone, then what? You sell at the supply zone. This is it. Now this is, just look at this diagram. At the peak, which is the supply zone, what do? You sell. You place your sell order from those particular points. When the market price gets to those points, it is time for you what? To place a sell order. When your market gets to the base, which is your demand zone, it is actually a signal for you to place a what? To place a buy order. So you place your buy order at the demand zone, where it's actually marked with the light green. You can see it's already marked with light green. Then you also actually what? Place your sell at what? At the supply zone. Okay, so this is a very clear example of how to actually go about your supply and demand. Okay, now this is very, very important. I want to do something. I want to just show you something, maybe using my M5. I want to pick a particular pair. Now I want to pick gold. This is gold here. So I pick gold is XAU USDD. Is there? I go on my chart. I want to 1 minute. Then I want to change it to gold. This is gold. So I'm going to the bigger time frame. I'm going to H4. Let's say I'm going to H4. I click on H4 here. Now this is my H4. So it's not actually coming out clearly. I want to see where I can draw these things for you so that you can really understand. Okay, this was one that I drew previously. So I want to delete it. All right. Now I'll pick my rectangular tool. I go on the, after plus F and this particular sign here, I click on it. Then I come here. I'll look for my rectangle tool. This is my rectangle tool here. I pick on the rectangle tool I want to draw. So you can see from here to here, I pick my rectangle tool. I see pick it again. This is it already there. And this one, this place too, as you can see. So what does that tells you? This particular point where I just marked now, that point is my point of support, while this one below here is actually my point of what? Support, my supply zone here up, while here is actually my demand zone. Let me change the color so that maybe it will change the style to a better color where you can now understand. Maybe blue. Okay, I'm choosing blue now. I chose blue. Okay, this is the color I'm going for. So I want to change the color to blue. I chose the color blue already. So color blue is okay for me. Okay, I've changed it to blue now. So that red zone is actually my supply zone, while this particular side where the blue is actually what? My demand zone. So it means price will actually range between this particular zone. It's going to be touching either the supply zone and actually the demand zone. Now price will go in between these particular zones, between the supply and the demand zone, except if there is a breakout. If there is a breakout, then if it breaks the supply zone, it means your supply zone turns to become what? A demand zone. So there may be a breakout in some cases where you have a cases of breakout. In my next videos, I'm going to be explaining what breakouts, how you can trade breakout. But for now, just try and understand how you can actually understand how to draw your supply and demand zone. So I just use practically now to show you using gold versus US dollar to show you how you can draw it. So within this particular zone is where your demand zone is and where your supply zone. You can see the red, which is your supply. The blue is actually what? Your demand. It's very simple. You understand? These are how to draw your demand and supply zone. I hope this video has been very helpful to you guys out there. So please, if it has been very helpful, do not hesitate to click the like and share button to someone out there. This video is very helpful, which I know is able to simplify to you how you can draw your supply and demand zone. I still remain your boy, David Capable. See you guys in our subsequent video.